Speaking of Wall Street versus Main Street, let's bring in Yahoo Finance Brooke DiPalma, who is tracking the chatter here. Brooke, what are you seeing out there?
Yeah, well, right now, shares of Starbucks down about 6%. We're seeing shares down 5.64% in after hours trading. Now, I did catch up with two Wall Street analysts, and one analyst, Sean Dunlop, who we caught up earlier today from Morningstar, said the market's reaction is interesting to wrestle with here. He said that, like you are saying, it is possible that investors were expecting more. They did push that guidance. They chose not to rather change it, but they did reaffirm it. And so he mentioned that it could also reflect a quote unquote moderating operating margin expansion over the second half of the year. So something to look out for there. Peter Slay of BTIG said that shares are likely down because they reiterated that guidance rather than raise for the full year reflective. Maybe investors were looking for more here, but Peter Slay emphasizing that this was a nice beat. Halfway through the year, they're continuing to see these trends, holding guidance the same, and they're not going to raise that guidance. And maybe some investors we're expecting that. Now, moving right along, they did also weigh in on same-store sales. Sean Dunlop saying that the balanced comp in North America was great to see. Peter also weighing in that this was a nice beat, but we did see that compression in check size on a quarterly basis. He said that that could be explained by higher in-office traffic. Sean Dunlop said that. He said that maybe we're seeing fewer family checks in suburban stores, largely during the pandemic. We saw so many people bulk up their orders as they bought more coffee for their family. They also could suggest some trading down. In addition to that, Sean Dunlop did weigh in on that loyalty piece. We saw 57% of total spend, despite changes to its reward system back in February, go through that loyalty rewards app. Now, Main Street largely trying to get used to this. We did see in April that there were some, bugs in the app that led people to take to social media saying that Starbucks added a free drink and then took it away. That led to some feistiness, some unhappiness among Starbucks consumers. But it seems like that reward system that had Main Street largely upset was able to be pushed through, and in fact is, boosting sales there. And another focus that these analysts are looking at is, of course, labor. Unionization efforts have been dwindling at Starbucks locations, but it cannot be ignored. It was something that was largely closely watched by Main Street and Wall Street in 2022, and that continued into 2023. Now, just to reemphasize the numbers, we saw barista turnover down 9%, but market analyst Sean Dunlop said that he was fairly modest about that 9% from peak, and average hours per worker up 4%. He said that struck him as fairly modest, but Peter Slay also emphasizing that this is what we're seeing across the industry. Labor productivity increasing, retention is up, and nothing was mentioned about unionization efforts on the call, similar to previous quarters. But of course, Main Street watching Starbucks Workers United, they tweeted about 2 hours ago that they gave those proposals Starbucks about 7 months ago, and that nothing has been done in terms of counter proposals. So Main Street and Wall Street largely tussling here.